Hello and welcome to this week's Ferrari Financial US market news summary. Well, it was a volatile week on Wall Street again this week, and much as we expected, there was an attempted pullback on Tuesday, and in fact from the close on Monday night to the close on Tuesday, there was an upward movement of 120 points on the Nasdaq, which was certainly a strong rally. But it didn't last. Wednesday saw a down day, followed by really a fall towards the end of the week. A slight pullback very late on Friday night helped to show just a 20-point rise for the Nasdaq for the week. Pretty well much as we expected. Consolidation this week with an attempted rally that failed. Of course, there's a whole raft of problems still out there to concern investors. Notably the continuing subprime lending problems, the rising price of oil, the weakness in the US housing market, and not to mention, of course, the extreme weakness of the US dollar. The main issue now is probably how well the consumer is going to hold up, particularly during the upcoming holiday season. And this is the main concern. Will all of these problems impact the consumer and drop the retail section drastically as is expected? The consumer has certainly shown resilience so far, but we'll really know more after the Thanksgiving holiday season. Let's take a look at our Nasdaq chart for this week. Well, it's a bit of a different chart we're looking at this week. We feel that this is the week that the bull market ended. The bull market that's lasted over 5 years now has probably come to an end now for a short time, because the selling that's been prevalent in the last several months finally climaxed this week with a massive drop, really. In the space of 3 days alone from here to where it seems to be settling over the weekend at just over 2,600, the Nasdaq dropped from its peak of 2,850 just over a week ago. That's a massive drop in a short time, on particularly high volume as well, which is very significant. But the most significant part of the fall was its broad-based nature, and in particular the fact that it was the large cap tech stocks that saw the largest drop. Financial sector has been weak for some time now, so a large percentage drop in that was pretty well expected. But the fact that it was the tech sector that really led the way down means that most people are feeling that really the market has gone as far as it's going to for the time being, in the light of the present US economic conditions, all the problems that seem to be mounting out there, and finally succumbed to selling pressure this week. Looking at the scenarios we have in place, we now feel that the two main scenarios to be looking at is one that we mentioned a few weeks ago when this top was first being formed, and we drew a channel line. If I can just put that in again for you, the channel line about there representing that top, and then we looked at where there was considerable support for the market 3 or 4 months ago when we had a correction at that time, and this is the line really that was formed at that point, a support line down at just about the 2,500 level, just slightly below really. But if we go back, we see that this line extends way back as well to the beginning of the year, where there was a large support level here, and at the time it formed a barrier really for the market to go further up. There was a small correction before the market then took off in good style, which has really been the bull market of the last year, which we feel now has come to an end. The other scenario to look for really is the formation of a head and shoulders pattern, this being the left shoulder here, and this being the head forming, and of course the right shoulder should be forming out here in the next few months. This will then really give the impression that the market, even in the new year, is liable to take a further downturn to complete that head and shoulders pattern. If the channel lines simply form, The market may well just operate between these channel lines for the next few months, which will be a better scenario for the market, of course, if a longer term period of consolidation is the result of this sell-off and not the start of a much longer downturn pattern. So the Nasdaq index really ended this week very much at the same level as last week, but the significant point being that there was a strong attempt at a rally on Tuesday, which fizzled out very quickly. And going forward, well, we feel that probably more consolidation is really on the cards, and probably another attempt at a rally before maybe the market decides to take that next leg down. Last week we suggested that maybe a better policy to have at the moment was to sell the peaks, which is completely the opposite, of course, of what has been working very well for a long time now, and that is to buy the dips in the market. But we feel that we may be in for a series of attempted rallies to try and pull this a sell-off back somewhat in the next month or two. We don't feel that those will be successful, and a better policy would be to sell at the top of each one of those attempted pullbacks. Our feeling is that we're going to have a serious turnaround in several areas of the economy before really this market will have the incentive to start driving forward again. We'll probably have to wait till after the Thanksgiving holiday season to see how the retailers fared, to really get some sort of idea of how the market's going to move towards the Christmas period. But until then, it's very difficult to call market direction. So until next week's report, it's goodbye from London.